morning, ladies and gentlemen. Wednesday, February 7th. You've tuned into the Nifty podcast. We have a lot to discuss today. We are going to discuss the very eventful Quantum Cats trading debut. You've heard us talk about this collection on the show for days at this point. It is now officially minted and is trading live on the secondary market. So we will dive into that action. We're also going to talk about the new ERC 404 token that did a 10x in the last week. And finally, we're going to be joined, a lot of guests this week. We're going to be joined by William Quigley, the co-founder of the Wax blockchain, and previously, get this, the co-founder of Tether, as in USDT stablecoin organization Tether, to discuss all things blockchains, alt L1s, the Bitcoin ETF takeaways, the future of stablecoin organizations. We're going to dig in with William. So it's going to be a good time. Bunny, how you doing today?
I'm doing great, dude. How are you doing?
I'm doing great. Easy is on his way up to New York right now. He's going to come up to New York for a few days, work in person with me. He's going to get to meet Jack. Hopefully we'll get to meet Kevin, some of the new hires that we've made here at the Nifty. I saw that he's going to be playing basketball with Nick, which is an interesting thing to have on the calendar. That's I hope Nick doesn't get hurt in that process. So that'll be fun. And then we have dinner tomorrow night with you, big dog.
Very excited for dinner.
You can eat any of the food?
Maybe. Let's see what they got. Hopefully they got some chicken fingers there. Dude, we got to get a camera. I would almost rather go to see Nick play basketball than to go to dinner with you. I don't want you to be offended by that, but I feel like watching Nick play basketball would be very special.
I think it would be quite special. That's happening this evening. So that doesn't even, that's not a conflict with dinner. That'll be interesting. One thing, when we were going to do a partnership with a sports organization, I was actually planning to have Nick shoot me and Clemente one-on-one in basketball. And I was just going to go really hard on Clemente and try to like absolutely whip his ass. And I think that,
I don't know. I mean, he's got the bum shoulder.
Fantastic cardio. So that's what I am. I'm like a junkyard dog. I'm constantly getting at you, like Dennis Rodman. Like Mario Chalmers, basically, when the big three, Miami Chalmers was there. He was killing him, one of the big three. I mirror that playing style, essentially.
Okay, well, I saw your tennis video and I really liked it. And I hope that there's more tennis videos where that came from, because I always liked people that are actually good at stuff posting videos of it. You looked sick at tennis. Also, we got Sound Money over here saying, I'm about to plow some goat curry roti. I actually, funny enough, went out with my Indian friend for dinner Monday night, 2 nights ago, and we got like a fire goat curry dish. If you think that I would ever invite Bunny to go to an Indian joint, I wouldn't, because Bunny won't even eat stuff at normal restaurants, let alone anything from another culture. So I picked an Italian place. We'll have to see if he cares for it and if he literally eats any dishes that are on the table. Look, anyway, we got a lot to dive into, so I'm just going to get cooking here. Today's show is brought to you, by the way, in partnership with EOS Sapiens and their upcoming project that's happening. It's dropping today at 12 p.m. Eastern time. So this is a 5,505 piece generatively crafted NFT collection. So they also represent 1 ton of CO2 sourced from, check it out, the Rimbaraya Biodiversity Reserve in Indonesia. So a lot of action on this one. You should definitely take a look at this project, really dig into it, because I think that there's a lot there. The idea is that the collection is going to tie real-world assets and NFTs and allow carbon credits to be traded on the blockchain in addition to the profile picture that the carbon credit actually comes with. So this is the EOS Sapiens collection. It's minting today starting at 12 p.m. Eastern time. You can sign up for a chance at the allow list via first come, first serve by checking out the pinned tweet. Fun fact, if I'm not mistaken, this organization is also part of the, the accelerator that me and Nick and our organization actually went through at Boost VC. So really, really great investors backing this organization. Love to support people from, kind of the same entrepreneurial network that our organization comes from too. So, that there's some quality people building this one. Love to see our investors investing in more NFT organizations. So really, really cool stuff. Again, that goes live at 12 p.m. Eastern time. Clemente has all the links posted on Twitter. He's showing everything on YouTube too. Bunny, we're about to add something right there. Maybe not. That was just Bunny like breathing into his microphone.
No, I wasn't. I was muted. I wasn't breathing into anything.
Okay. Well, Bunny, you have the weather report. I literally wrote out the weather report rankings yesterday, and Bunny's right there on the top of the list. I had to think through just every detail of the show, and I was like, well, look, if Signal's not here, who reads the weather report? And Bunny is just right at the top of the list. So let's cook, Bunny.
It is Wednesday, February 7th. ETH market volume coming in at 19.5 million. Solana market volume at 8.3 million. After many, many delays, the Quantum Cats finally began trading yesterday, debuted at a 0.16 Bitcoin floor for about 30 minutes before starting their leg up. Since then, they've done a 2x to 0.32 BTC, including Quantum Cat sales, multiple sales for 1 Bitcoin. The collection has also recorded 256 BTC in trading volume. That's over 11 million buckaroos. Wormhole, the latest airdrop tease to NFT holders as the cross-chain interoperability platform, announced a partnership with DGods and Utes. As a result of the announcement, Utes rallied over 30% to 0.68 ETH, with the potential token drop expected for holders that use the platform that raised $225 million back in November 2023. Dimensions mainnet went live yesterday and experienced heavy volume in addition to some hiccups upon launch. But despite this, the DIM token, which was airdropped to a variety of NFT holders and token stakers, rallied 40% from its $4 pre-market price to $5.60. Only problem, PO, no one knows how to sell it.
I saw you tweeting about this.
No one knows how to sell it.
Should I feel all right? Anyway, go ahead.
Lastly, winner of the day, Pandora token, which is a new ERC 404 token that combines the ERC 721 and ERC 20 functionality. And each Pandora NFT trades every time someone trades more than 5 million tokens. The Pandora NFT has done a clean X in the last 7 days.
What's a clean X?
A clean 10X. That's what
you said a clean X.
I said a clean 10X in the last 7 days, up to 5.8 ETH. And the Pandora token is up to $140 million market cap. That's back to you in the studio, PO.
Oh, that was a fun weather report. It was interesting. I feel like a little bit less passion from Bunny than usual, but nonetheless a fantastic weather report read. Some updates from the newsletter, which is the daily digest posted to X platform every morning and pinned up top. It's also emailed to anyone that subscribes at thenifty.com. RSIC runes have reached another all-time high of 0.12 Bitcoin, and it is up 2x in the last 7 days. So more action on the ordinals front. The meme coin GME has hit a new all-time high market cap of 84 million. I am surprised it took this long for somebody to make a GME. So GameStop's stock ticker is GME, right? Or
this meme coin's called GameStop.
Yeah,
got it.
This was pumping right around the anniversary of GameStop.
Well, there you go. That is like literally a formula for success. I am not surprised at this at all. And I, if anything, I'm only surprised at how many years it took before somebody made a meme coin with the ticker GME, literally just calling it GameStop. Can't say I'm surprised that people have done well trading that meme coin. Next story, CryptoPunks announced the launch of Punks in Residence initiative, starting with artist Nina Chanel Abney. I've talked about this artist on the show before. Very, very interesting, very successful outside of the NFT space, has an NFT collection, Nina's Super Cool World.
She did right now she's doing an exhibition in Wynwood. Yeah, I was riding my bike and I was like, oh, those are the Nina Super Cool World. Little did I know she's like crushing it in the real world.
Definitely crushing it. The NFT market doesn't care yet. I wonder how much. I mean, obviously there is some degree of care if you look at the market cap of the NFT collection. But I do wonder how much real world success it requires before it starts to bleed. I mean, 0.64 ETH floor. I feel like that's up 2x from what it used to be when we used to talk about this on the show, and that's with a little bit of appreciation from Ethereum. So yeah, I mean, if you look at the chart, it ain't the bottom for this collection. Yeah, pretty interesting stuff. How many pieces are in this collection?
5,000.
Yeah, 5,000. See, that's the only thing is like when we can look it up. I don't know how many paintings Picasso made, but I don't know how many more than 5,000 it would be over the literal lifetime. That's the one thing about the digital art. It's like in one fell swoop, boom, I got 7,000 pieces on the market. Boom, I got 4,000 pieces in the market. That's the one thing that we're going to have to see how that plays out. And it makes it challenging to be a, quote, art collector in the NFT space. Next story, the SEC, our favorite people in the world, the SEC, has delayed Invesco and Galaxy's spot ETH ETF decisions. And according to James Seyffert, the only day that matters is May 23rd, Van Eck's final deadline date. So we're going to see if old Gary boy, Gary Gensler, is going to really, really push back on the the spot ETH ETF approval. This time around, we're going to see if we can get this across the line in 2024, if he's going to fight tooth and nail to not have it approved alongside Elizabeth Warren and her anti-crypto army. Next story, Magic Eden has partnered with Azuki to become the preferred marketplace for Chiru Labs, which I suppose is the Yuga Labs equivalent for Azuki, the parent company. Interesting. So we've seen actually a lot of different partnerships. I don't know why I keep saying approvals. Partnerships between Magic Eden and other notable NFT organizations in the past week. Next story, MicroStrategy, our good buddy Michael Saylor over there. Hope we can get him on the show eventually. News came out that MicroStrategy acquired another 850 Bitcoins for $37 million in January. Nothing new if you've been following Michael Saylor and MicroStrategy for a while. This is what they do. Also had an earnings call that was very, very bullish yesterday. Haven't checked the price of MicroStrategy pre-market today, but we'll have to see how it opens at 9:30. Always love to see Bitcoin companies doing well. Last story, Iron Paw Gang, the artist from that organization, Adam Grabowski, has reached an agreement with Random Character Collective, RCC, to transfer ownership of the NFT collection to himself. And the collection is expected to be bridged to Solana. So basically, this is a removal of the collection from Random Character Collective, and he's going to bridge it to Solana. Very interesting stuff. And I think a lot of people...
Sorry, real quick. Did a 4X on the news PO as well from 0.02 to 0.08.
I think that makes sense. I wouldn't...
This Adam guy, dude, Easy did a tier ranking, right? When this project was minting, and I put this project in under Issa Rug, right? That was one of the categories. That's where I ranked it. This guy then came on a live stream with us, and it was extremely awkward for me. He made multiple comments, and then it turns out I was right. It is the fucking Rug. He sells the project for $0 because he's just done with it. He made enough money off the primary sale, and now he can pivot to AI or something like that.
I mean, look, we'll see what happens. Clemente.
Wait, hold on. So I think this is Adam is was doing this for Random Character Collective, which is the team behind Invisible Friends, if I'm not mistaken. And he basically is getting the collection back and now is taking ownership of it, if I'm not mistaken. So if anything, Bunny, this is bullish for this artist. He's doing the opposite.
So Random Characters is the one who rugged it?
Yeah.
Same thing.
Bunny, well, look, sure. Basically, I mean, but it's cool to see the artist get it back and that he says he wants to bridge it to Solana. I just think that's people bridging things to Solana is very interesting to me. It really, really is. The user experience on Solana is just way better for NFTs. It's not even comparable, quite frankly. It's really not comparable. I do not want to go and, like, for example, let's say I really wanted this because it's going to bridge to Solana. I basically wait until it goes to Solana. I don't want to go to Ethereum and spend $25 in gas to do it. Like, I'm just saying, like, how much do I have to pay in gas fees over a 3-year period? Like, how much do I have to donate to Ethereum, like the Ethereum blockchain? Anyway, those are your updates from the Nifty Daily Digest. Subscribe at thenifty.com. Some quick hitters before we are joined in about 15 minutes by William Quigley of Wax Blockchain and Tether fame. Quantum Cats. No surprise, 2x in the trading debut. Opened at 0.16 Bitcoins, which is way lower than I thought. Did you buy one?
No, I texted you. I messaged you. I'm like, yo,
no, you didn't.
I literally go to Slack. in this, see, I can pull up the message as go, yo, Pio, if you got 0.16 Bitcoin laying around, literally buy one.
I know, but I didn't.
You didn't
like,
buy one?
Nah,
You have more Bitcoin than Michael Saylor, and you didn't buy
I do not have more Bitcoin than Michael Saylor. I would have had to transfer the Bitcoin from a hardware wallet to, a functioning, a browser wallet. The other thing is that I don't have any experience in Ordinal's gas wars. So that just sounds like a 1 hour time suck in the middle of like an intense day that was not going to have me end up getting a Quantum Cat. If you had bought the Quantum Cat for 0.16 and then just casually transferred it to me for 0.16, yeah, sure, absolutely, I would have done that. But
real quick, Theo. So in the chat that we were supposed to, the 6 of us or however many it was that were supposed to buy a Quantum Cat. We were supposed to go in on one together on the public mint.
Yes, you and 5 random people that
Bodoggos.
Okay, 5 of you on 1.16 Bitcoin asset. What?
So we were considering, we were like, yo, should we re-up in case this thing doesn't debut at like 0.3? If it gets below 0.2, like, let's go. And we decided not to do it. And instead we had only 0.1 Bitcoin left, so we couldn't buy a Quantum Cat. So we instead bought a Bitcoin rig, a Bitcoin miner.
What do you mean?
There's like this ordinal you can buy that basically you buy ownership. You have a real world miner that's linked to an ordinal, and then the mining rewards get sent to a multi-sig wallet of your choosing. So we went in on one, but like we're just tying up our funds for like 2 years.
Yeah, I don't know if that. I think you could have done something else. I think really just buying more Bitcoin would have been a good move there. Really surprised that Quantum Cat's opened at less than 0.2. It was clearly a mistake in the market definitively, and it corrected almost immediately. Are they sitting at 0.3 Bitcoins right now? As expected?
But their market cap is still way lower than, it's barely higher than like Bitcoin Puppets. It's still lower than Node Monks or Node Monkeys when you look at that, because it's only a 3 collection. So
it's pretty interesting, man. It's a pretty interesting one. I wonder how much Solana 0.3 Bitcoins is. I think it's probably a lot. Is it like, are these more expensive than a Mad Lad or the same price as a Mad Lad?
12 grand.
They're 12 grand. That's a lot.
But again, you got to look at it from a market cap perspective. So a little bit, you got to divide it by 3 when it's to size it up with a 10K collection.
How much is a Mad Lad? 170 Solana. So a Mad Lad is more expensive than this. Pretty interesting.
You got to do market cap though. It's just,
I know. I'm looking at individual asset price. It's not going to be comparable market cap wise because there's only 300 of them. I don't know. The Quantum Cats might be a good buy here. Not going to lie. Kind of want to buy one, but kind of also don't want to turn 0.3 Bitcoins into an NFT. But I did that before, and usually the NFT outperforms. Well, we'll see. Bunny, are you interested in this one?
I mean, I'm not paying these prices, but I don't think it's necessarily a bad buy, right? Like, I legitimately believe this is going to be the premier ordinal collection until Wizards launch, right? So, like, it wouldn't shock me if it kept going up.
Yeah. Interesting stuff. All eyes are on it right now, and I generally don't like to buy things when all eyes are on it, but that doesn't mean that, like, this thing could run from 0.3 to 0.45, and then the pullback could be to like 0.36. So it would ultimately be better to buy it here. Clemente?
Yeah, we can talk. I got some lower cost stuff in the less than $100 regions. If you want to talk ordinals, get your feet wet a little bit, dabble in some degen ordinals.
I have my Ninja. No, I don't want to dabble in any degen ordinal stuff.
But if you want some lower cost stuff, you know, some high upside, maybe a little bit risky, it'll get your blood pumping a little bit.
No, I don't want that. No.
Oh, lay it on me. Lay it on me.
Yeah, tell Bunny.
Take the private chat, dude. I got some good stuff for you.
Why the private chat? Just say it.
I want to buy the dip on these little cats that I'm looking at here.
Wait, dude, there's no way you were saying sell Bitcoin puppets, but you're buying the cat.
I'm a buyer. I turned on the Bitcoin
derivative version of them.
This is preposterous. Ladies and gentlemen, if you're just listening, Clemente pulled up the cat version of a Bitcoin puppet, which is essentially a double derivative. It's a derivative of quantum cats and Bitcoin puppets. The thing is like the Bitcoin community, they don't have the scouting report from the NFT space. So you actually can get an edge on the Bitcoin community if you followed NFTs, because they don't know all the rules from the previous NFT cycle. They definitively do not. They're blind, and you can see. And so, yeah, there's a bunch of shit that's going to pump over there. Bitcoin puppets was one of them. And, you know, you can definitely kind of pull one over on them. We'll have to see how it goes. Next story. And this is for you, Bunny. The GME meme coin reached a new market cap high of $84 million. So, Bunny, I know you follow meme coins. It doesn't seem like you buy meme coins. Is there any notable story to this one besides the name of the ticker and the name of the coin?
The notable story is that I just watched this stupid movie on Netflix, and I didn't buy the coin.
Why are people suddenly watching the movie now when it's been out for months?
I think it just dropped on Netflix.
Oh, okay.
Yeah.
Okay. Got it. Any notable information about the coin, or is it just typically another typical kind of shitcoin situation?
Just typical shit. We had a nice shitcoin fight the other day. I don't know if you saw the big space. It was at Issa.
Definitely did not see it. Please tell me.
He says he made the meme dog with hat. So he launched his own dog with hat on Ethereum, and then they're like, my meme coin's better than your meme coin. And then he was like, no, dude, my meme coin is better than your meme coin. And that was pretty much the whole thing. It was kind of boring.
Well, it sounds very insightful. Next story.
I had two questions on the meme coin side to our resident meme coin expert, Money. I saw Harambe briefly rebounded yesterday, Money. I know you've been talking about it a little bit on your space. There's some drama there. And I was frankly very surprised that Anita Max win. The token associated with Drake did not pump yesterday. It's down another 35%.
There was a lot of new Drake coins that popped up yesterday on the heels of the leaked video. Harambe, though, that's like the meme coin analyst on my show at night, Shrimp. Dude, we even made a whole song for this guy. Remember? Come on, dude, he's retired now. He's retired from NFTs and crypto now that Harambe has dipped so
Shrimp
much.
is.
Yeah, dude, he's gone.
I don't believe that.
He's gone.
I don't believe that. Well, anyway, next story. Wormhole partnered with D-Gods and Utes. So some action out of D-Gods and Utes. Also saw that someone tweeted out, I guess, a little bit of drama in the D-Gods ecosystem yesterday. But what is the deal with this Wormhole partnership, Clemente?
Yeah, so as of now, they basically just teased that, like, they're like, hey, we're partnering with D-Gods and Utes. Go into the Discord. You have 12 hours to do so. And then additionally, they tweeted out that Wormhole Wednesday is coming today with D-Gods and Utes responding to it. Everyone thinks that a Wormhole airdrop is coming and that it's going to be going to Utes and D-Gods. I don't know if it's going to be the ones that like bridge and do this whole layer zero kind of thing. Bunny, I don't know if you saw anything in addition to it.
My favorite thing about this was just like, this is like Frank's wheelhouse, right? I thought he got the timing of the announcement perfect, right? Like as soon as the DIM airdrop hit everybody's wallets was when this Wormhole like teaser thing happened. So I feel like that's just when there was a little bit of drama. People are saying that like Kevin doesn't have the D-Gods role in Discord or something like that. So people are speculating that maybe he's not there anymore.
I think, I don't think he's there anymore, to be honest with you. I think he's out. But the funniest thing is, like, the NFT market basically doesn't care about Kevin being out. If he is, the NFT, they don't give a shit about it.
Vibes were up in their space last night. Yeah, they didn't care at all.
Yeah, they're just like, yo, airdrop, bro, Wormhole, let's go. Now we're talking. The Utes hadn't pumped in the last 6 months. They tried Points Parlay. They tried the latest partnership. Like, yo, let's throw a banger at NFT and whatever party. No, but as soon as we partner up with the Wormhole, now we're talking. The thing pumps 40%. It's funny.
The number one thing that the sort of broad NFT market cares about is any sort of free money opportunity, even if it's negligible. And if anything, for example, the DIM airdrop being so significant, even if the next one is not as significant, just like that buzzword of airdrop is going to effectively be, something that people get excited about. Clemente?
And I saw Easy tweet this out yesterday that like he was like, hey, D-Gods and Utes are included in this, but why is no one talking about Mad Lads? Because they are an NFT included in this. So Pio, could be another airdrop coming for you. And this, I mean,
maybe I'll click the button on this one.
And keep in mind, Wormhole somehow raised not somehow, but they raised $225 million at an over $2 billion valuation in literally just in late November of last year.
I do remember that. That's awesome. That I love to see that. And I love to see it at that time too. Oh yeah, I forgot about this. We talked about this on the show. I feel like my impression when this happened was like, damn, like that is very, very good. Love to see Web3 businesses, crypto businesses getting built. We're going to talk to William Quigley about what the future holds for these big stablecoin organizations. But also just back to this, I think that I'm going to be getting an airdrop from a platform I've been just organically using for at this point over a month. Just saying, should be interesting. I don't know. I don't expect more than like $200. That's kind of like my mental expectation for all airdrops. That's probably why I didn't prioritize the dim one. I was like, all right, cool. It's $200. What do I have to do? Like, you know, what's the big deal? Turn out to be 10 grand. But yeah, I do think that there's one airdrop coming in my little ecosystem. So we'll have to see.
Did you join the Discord, the Wormhole Discord with your Mad Lad?
No.
You know, we're never going to get. What are we going to do with this guy, buddy?
We'll get an admin to do that.
Not getting any airdrop.
Why would I have to join the Discord?
That's like, what the instruction said. Join the Discord. Back
in my day, the airdrop just hit the wallet. That's kind of what airdrop means. It just hits the wallet.
Back in the day, you didn't even have to farm it. They just airdropped you for something that you were already doing that you didn't even know you were doing.
The ENS airdrop. Yep. ENS, right? Boom.
Looks rare. It was just
rare.
We used OpenSea.
Boom. Boom. That's what an airdrop is, ladies and gentlemen. It just goes to the wallet. That's it. It just goes to the wallet. I don't click any buttons. I have the thing. It goes to the wallet. We'll bring those back. Don't worry.
They're trying to build a funnel though, right? They by getting you in the Discord, they can start grabbing that data. They can be like, yo, investor XYZ, guess what? Our Discord users are up 4x in the last week. Check that out. And we got their emails and we got their ID, their wallet. So they're trying to grab all that stuff. They're getting more advanced now, I think is what's going on here.
The airdrop is going to be $200, so it doesn't matter, you know? But we'll see.
Well, we'll get an intern. We got to get an intern to manage your airdrops for you in the future, apparently.
Yeah. I mean, if you think I'm just like going to be clicking buttons, putting glasses on, looking like an old man, being like, what Discord do I like? Dude, that is like literally, let me just tell you, the least interesting thing to me in the whole world is clicking buttons on different websites for airdrops. I'm just telling you, that is like the single least interesting. I'm not trying to like sound like a jerk. I'm just saying that is like so uninteresting compared to like, you know, building a brand empire with Botagas. Like which one do you think is better? Anyway, Clemente, so yeah, we're gonna have William in just a few minutes joining the show. I think we got Nick backstage. If he wants to pop on, we'll have to see. Last thing that we can, what's going on, Nick? How you doing, buddy? You are muted, sir.
Yeah, I know I'm muted. That's just it's a feature, not a bug. I'm doing pretty well. You know, just researching some William Quigley related stuff here.
Love to hear that you're researching.
Bringing the
hear your perspective on some of these things versus I was watching an interview with him where he basically said Bitcoin just failed its promise at the beginning of Bitcoin, and is someone who's clearly like a religious zealot of Bitcoin. I'm going to be interested in hearing what your, how you feel about some of his comments on this. And in fact, have set up for maybe you asking something that would result in me finally observing you losing to somebody who is early on in the Bitcoin cycle, who just dunks on you to let you know. Yeah, just like your sort of theoretical position. Like this is more of a.
Well, look at the insight from one of our commenters. Bitcoin's going to zero. Look at that, and that I can't wait. It's just gonna whoop. It's just gonna go straight down. No, I'm really
go to zero. Remember?
I think it did. Yeah, it did. Yesterday went to zero, dude. The network went down. When it came back on, everybody sold, and we're coping.
The network, I feel like we're just kind of overlooking how bad the network going down truly is, though, right? Like,
oh yeah, it's not great.
Yeah,
it's not great. But keep in mind, it's not money. So like, it's not, like Solana's not money. So it's not like it's competing with Bitcoin or anything like that.
Well, before William comes on, let's dive into something, because this is
absolutely let's go.
Let's just go into this. Let's talk about the Bitcoin white paper, PO.
Sure.
And let's start with the foundation.
The peer-to-peer electronic cash system.
Yeah,
I'm wearing a shirt with a quote from the Bitcoin white paper on it.
Oh my god!
Yeah,
Dude, you know, people grow up and they're like in their mirror pretending they're like LeBron James or Michael Jordan. P.O. when he was just in his mirror pretending he was like fucking Michael Saylor or like some big hell.
You know what's crazy?
William came and left, by the way. He's not here anymore.
He's trying to get the video working, I think. The Bitcoin white paper, by the way, literally crashes Brave browser. I just thought that's sort of funny. Like if you load it from the Bitcoin website, bitcoin.org/bitcoin.pdf, just can't get that to load. It'll crash your browser. But basically the foundation of it turned out to not be effective, basically, is what he was saying, you know, in one of his other interviews, because it takes 10 minutes to settle, essentially. And the settlement time, the price would be volatile during that 10-minute time, which is what gave rise to Tether in the first place. Tether, by the way, owns a lot of Bitcoin. So it's not like, I don't think he has a position. And I don't even know. I'll be interested to hear what his involvement, if any, with Tether is these days, versus like at the foundation of it versus where it is today. But I mean, that wasn't, you know, the purpose of it. It didn't say Bitcoin a replacement for gold.
Correct.
You know? Like,
correct.
So I just think from that standpoint,
Bitcoin a replacement for gold would be a fire title, fire headline for the white paper. Nick, you are absolutely right that Bitcoin layer 1 definitively is not a better option for peer-to-peer money transfer than Tether, USDC, quite frankly, Solana, and other layer 1 solutions that are better. And we're going to have William, who's obviously a way better person to speak with about this than I am. Bitcoin's a technology product, right? It's a revolutionary technology product. We'll see if layer 2s actually, you know, fulfill the kind of peer-to-peer cash transfer, you know, idea that Bitcoin's white paper set out. But as of right now, of course, it's better to send stablecoins to somebody. Look, ladies and gentlemen, real quick, today's show is brought to you in partnership with EOS Sapiens and their upcoming drop that's happening at 12 p.m. Eastern time today. I see them in the audience. I actually invited them to the Twitter stage so that everybody could see the Twitter account. So if they want to pop open the Twitter account and just accept the invitation to come on stage, they totally should just pop the account on stage so that everyone can easily follow them. The drop is a collection of 5,555 generatively crafted NFTs that also represent 1 ton of CO2 sourced from the Rimba Raya Biodiversity Reserve in Indonesia. So this collection ties real-world assets, RWAs, and NFTs and allows carbon credits to be traded on the blockchain in addition to the profile picture that the carbon credit comes with. So the EOS Sapiens collection is minting today starting at 12 p.m. Eastern. So really just in about 2.5 hours. And you can sign up for a chance at the allow list via first come, first serve by checking out our pin tweet. So we have a pin tweet on the Twitter Spaces. Clemente has all of the information on stream right now on video regarding the mint. So really interesting project. I already pointed out that, you know, the team over at EOS Sapiens has the same backing, if you will, from an investor perspective that our organization does. Shout out to Boost VC. So really, really good people supporting the organization. Really, really excited to have them as today's partner. Nick?
I'm seeing I'm trying to figure out who created the painting behind William, actually. Is
Okay, well, let's bring him on. So, ladies and gentlemen, we have the co-founder of Wax Blockchain, the co-founder of Tether, that's USDT stablecoins organization, no stranger to making regular appearances on CNBC to talk all things crypto. William Quigley, welcome to the show.
Good morning, guys.
Good morning.
Who's the artist of the painting behind you?
I couldn't tell you.
Okay.
Yeah, could not tell you, but it is a pretty picture.
It's a pretty picture. We like those, William. William, I wanted to ask first and foremost. So Circle has announced that they're going to be going public. If you go on the Circle website, you can see a few different angles that they're realistically intending on taking or already taking in the next 2 years. I'm wondering, in your mind, the big stablecoin organizations, Circle, Tether, what is the future for these organizations? Because I think that they're very, very interesting. I'm wondering if they'll essentially look to compete with big banks. I'd love to know what we can sort of expect from organizations like Circle and Tether as they continue to build both in the crypto space and the traditional finance space.
Yeah, what I would say to you is, if you just look at the financial metrics, they're exceptional for any kind of stablecoin. Once you get above a certain level of deposits,
like $20 billion plus,
20 billion plus, they're not paying depositors for that directly. They get the benefit of the utility of the stablecoin, but they're not paying for those deposits like a bank would. These are exceptionally profitable businesses because they require so little to actually operate. So from that perspective, I would say they're attractive. Now, having said that, a stable coin in and of itself, because any bank, anybody can make one, I would say you would need to have a product expansion mindset. What are you going to do in addition to that in order to make it an interesting public company? Because public companies really are attract capital because they continue to grow. And then you have this question mark, and it's probably too in depth to talk about it here today. But what is the future of privately issued stablecoins if the majority of the world's governments issue their own stablecoins in the future? I think it's a near certainty that all of the major economies of the world will ultimately tokenize their currency, and it will be next to creating fiat. The tokenization of currency is, I think, the next greatest innovation in money. And so if you have all of the world's fiat tokenized, or the majority of it, and then you have privately issued stablecoins that are not decentralized, I think the decentralized ones are in a different category. They're in a way competing. I would probably, if I had to guess, say, provided there is not a massive regulatory effort to disallow privately issued stablecoins, in that case, probably the privately issued ones will be more innovative. They'll be able to move a little faster, and so they'll have a place in that giant ecosystem. But that part requires some speculation about how regulation moves forward.
Okay, so real quick, a couple things there, and Nick, if you can just hold that question for a second. William, I don't think it's crazy to say that the privately issued stable coins will probably be able to out innovate government issued stable coins, right?
I think so.
Yeah. So do you think it's a foregone conclusion that over the next 25 to 50 years, every country has or whatever the major currencies are CBDCs?
I just don't know how it can't be that way.
Yeah.
I'll just say, as somebody who's done a lot of technology innovation in my career, it's hard to find another example of where a innovation like stablecoins has so many benefits and absolutely no negatives. There's no drawbacks on every level that a currency should be evaluated against. Tokenizing it improves it. You just can't find something that makes it worse. So for this reason, I think it's a certainty that all currencies will tokenize.
Absolutely, Nick.
The thing I was going to ask, well, do you have any involvement with Tether anymore?
No, other than being a holder and a fan, I am not involved in any kind of day-to-day operations of the business.
Because I was going to ask, one of the things Tether historically has dealt with is just a bunch of scrutiny, and I don't know how long you were there while that was going on, but like even still today, Tether just comes under immense scrutiny, primarily including from like the SEC and other places. Some of it is potentially unwarranted. Some of it is warranted. Do you have any take on sort of Tether from the perspective of it being like an auditable, like that's something that Circle, I think, has historically been like, was kind of seen as the alternative for, was it's like it's backed by cash. Like that's like the position. Tether was like sort of a mixed bag of various assets, including Bitcoin, of which was like a big holding for Tether.
Mm-hmm.
Like I'm assuming at the founding of it, that was like a position that was taken, was like, hey, we're going to do a mixed bag of these different assets. What sort of risks are involved with that sort of approach, and how did you guys like navigate that early on? And do you think that the criticisms that exist today are warranted or not?
So I'd say when we created Tether, the concept was to allow for people to find really a safe harbor while holding crypto. Again, we don't have enough time to talk about all of the issues that faced crypto traders pre-2014, the launch of Tether. But if you were worried about where things were headed in the short term, there was no way to easily get out of a volatile token other than really converting it into cash. And that took time, wires in, wires out. It could be 5 or 6 days by the time you were like, okay, now I want to get back in. And then you had to reverse the process you just went through. So the idea was that it was always, and remember, it's important, Tether is not pegged to a dollar, right? I think that's a misnomer. It's not pegged. It's not a pegged currency. It is redeemable for a dollar, right? Whether it trades above or below a dollar depends on the holders and how they feel about it. And then regarding the what it would be backed against, our view was that it should be dollar for dollar, right? And so that's how it started out. The people who run it now, they have it backed by a collection of assets. And I can't really opine on it because I'm not looking at all those assets and how they behave. Mm-hmm. It looks more now like a bank in that respect, where you deposit your cash and then the bank takes some of that and issues loans, some of it, and it puts into short-term money market funds, different short-term securities. Unless you're Silicon Valley Bank and you go long-dated securities and then you go out of business.
Yep.
Now it's represented by a bag of different assets, but at the beginning it was just cash, and it really comes down to risk management, how you want to manage that collection of assets. If you've got really high quality risk management, then it should not be a problem. The problem we faced was banking. Naively, we thought, we're going to have all this cash, and that's a great, what we call in banking, core deposit, because that cash is basically going to sit there. We thought banks should line up. And of course, because of the war against crypto, it was very difficult to get a bank to take Tether on as a customer.
Fascinating. One thing you touched upon earlier, William, is the idea that, there could be an effort to ban private stablecoins. Like it's on the table, it's possible. But if Circle goes public, let's say if Tether goes public, does that, is that a major step against that reality?
Yeah, it's the same question we all had when Coinbase went public, right? It's like, well, Coinbase is now public. It's owned by shareholders, some of whom represent public pension funds and endowments.
Maybe people in the government.
Yeah, probably, right? People in the government. So would that cause the position of the SEC or any other U.S. federal regulator to change? And I think it should, but I don't know if it really does. What I think it does do is it allows for a deeper dialogue and more negotiation with the regulators. But it's certainly better than nothing, because once you're public, you're audited, you have a lot higher standards that you have to live by. Sarbanes-Oxley, that's about internal control procedures within the accounting and finance organizations. So I would say it's better, and I think Circle going public would probably be an indication that a lot of investors, because public investors have to buy those shares, believe that Circle will be allowed to continue to operate in the U.S.
Nick?
My questions are unrelated to Tether. I don't know.
Okay, I have one more then on Tether. So from you described Tether as more similar to a bank. In, call it 2 years from now, 5 years from now, 10 years from now, over time, do you see that, I guess, what we would call DeFi being kind of a core offering of an organization like a Tether or a Circle? In other words, right now, if I want to get a mortgage on a house, I can have $2 million worth of Bitcoin, Ethereum, and other cryptocurrencies, and the bank literally acknowledges that as zero. That is not an exaggeration. I don't know if anyone has, if you haven't tried to get a mortgage with crypto assets, the bank does not acknowledge them. Doesn't matter if they're in a centralized exchange like Coinbase, they are not assets. Now that there's IBIT and these other ETFs, because those are just securities issued by, an American financial institution, those would be acknowledged. But if you're a crypto millionaire, you can't get a mortgage right now. Do you think that the stablecoin organizations could offer services? You talked about once these companies are public, they need to expand their product offerings. Is that a core area of expansion?
Well, it ought to be. Yeah, I mean, DeFi is not possible without stablecoins. Yeah, stablecoins required.
It's gamble-fi without stable coins, right, William?
Yeah, you need smart contracts, leverage or a lending capability, and you need stable coins. Just, DeFi can't even operate without it. So it would be logical. And if one of these companies was to go public, I suspect they would do what most public companies do once they go public. They acquire the innovation as opposed to try to build it in-house, because now they have, hopefully, a large market cap that they can use as a currency to acquire businesses. And historically, especially if you look at consumer internet space, most of the M&A, the overwhelming majority of the M&A, mergers and acquisitions, was conducted by native internet companies. Most of the video game M&A is done by native video game companies and so on. So I would expect that is what would happen with Tether. And Circle. These are exceptionally profitable businesses. So the stocks should trade very well. For years, we had the VCs taking companies public that had no cash flow. They might be it might take a decade for them to turn profitable, whereas these businesses would be, they're profitable from day one. So DeFi is what looks today like the most enduring part of crypto, and I suspect it will continue. And as a result, stable coins are going to be greatly needed. And you can't use, like, a make or die is great. An on-chain created stablecoin, those are really nice, but they will never be sufficiently big enough, the supply, in order to satisfy the needs of DeFi. So something like Tether or Circle, that are derivatives of the dollar, are what's needed.
First mover advantage. Also sounds like if there's any entrepreneurs in the crowd, building a DeFi protocol over the next few years is probably a decent angle if you're looking for an acquisition. Nick.
Yeah, so I wanted to pivot subject areas here. Well, it's interesting that you said that DeFi is the essentially has some of the strongest lasting potential within this space, which I think makes sense given the fact that that how this whole space is just financialized. That's like the foundation of the crypto space. You're running Wax, which is on the NFT side of things. You guys have partnerships with huge brands. I remember Wax from the previous cycle, like 2021, having partnerships with Topps. Now you have other brands that you're partnered with here. Funko being the main one that I see promoted, as well as other huge brands as well. Hot Wheels, NASCAR, all these sorts of brands. How are you thinking, like, observing from, like, there's the technology side of things, which is, hey, why is Wax better than any other blockchain, which I'm sure is something that you can speak to. But I think what's more interesting is like, where do you see consumer behavior going right now in terms of NFT adoption? And how are you thinking about that? Because we've seen a number of places play on the licensing side. I think the only comparable to Wax from this would be like VV Chain has some similarities on the licensing side. But like, obviously we went through, like, it cooled off. We're now I think seeing a comeback, out of the bear market to some degree, but we haven't seen, like, widespread adoption of NFTs. How are you seeing and thinking about that today from a consumer adoption standpoint? Like, do you still have the same thesis, or has that thesis evolved since the last cycle?
Well, here's what I'd say. From 2017, when Wax launched, up until like early 2020, no one cared about NFTs. And our view, my partner and I, our view with Wax had been that we were looking at the video game industry and what are known as skins. And these tradable assets are barely tradable because most of the video game companies don't like it when you trade them. We were looking at those and saying, well, what if we were to move those to a blockchain? That would be, it's seemingly a lot better for people who want to trade video game skins. And it was very slow. The brands started really, as you said, with Topps, but I had spoken to those guys for 2 years, trying to explain to them that you've got these trading cards, and what you ought to do is tokenize them. And eventually they were like, well, maybe as an experiment. And it turned out, they sold them all out in 24 hours. And I didn't know how many we would sell, but I didn't think they would sell all out in 24 hours. And that was early 2020. And that sort of then, just from then on until the end of the bull cycle, people were going crazy with NFTs. I was not particularly happy with the way the NFT market was going, because it just got to be silly speculation, which means that it's not going to be stable in the long term. And of course, what happened was when the crypto markets cooled, NFTs cooled along with them. And since most people were trading them just to make a quick buck, that led to really a collapse of the volumes. And the volumes are coming back a bit now. Like, it's a few $100 million a month on pick a chain of trading volume. And the marketplaces, they're getting some, but for us at Wax, we were thinking video game virtual items. So blockchain-based gaming ultimately would hopefully be a thing. And then what we called virals are virtual plus in real life NFTs. And these are NFTs that are backed by a real world physical product.
Mm-hmm.
So when we started trading those actually were the first things we were trading. They weren't really NFTs. And people really like them. Some of the payment providers didn't like the fact that these things were being traded, and that was always and remains a problem. How do you get reasonable payments?
The payment providers meaning like Visa and MasterCard?
Yeah, and then the entities below them, so PayPal and that whole category. Stripe ultimately was a group that we spent about a year with, trying to explain to them how this stuff works. And then after a year, they said, okay, we'll let you guys sell NFTs using the Stripe mechanism. And then many other groups started saying, oh, we'll try Stripe too. And Stripe is still a pretty good and reliable payment processor.
Nifty Gateway, I believe, at the early stages of 2020 and 2021 was also built on Stripe. So that makes sense.
Yeah. Because the issue, without getting too geeky here, the issue with virtual items, and my partner and I were trading these for 20 years in the video game space. The issue is they are bearer instruments, and a bearer instrument is something that whoever owns it has ownership of it. If you hold it and you possess it, it's yours. And so as a result, bad guys who do payment fraud, who use stolen credit cards, really like to buy virtual items, because once you have them, it's yours. You can trade it as you want anywhere in the world. And so that was really the big problem to try to solve. And we solved that one pretty well.
Money laundering, right? Money laundering.
Not money laundering. Money laundering is not as... I think of it differently. I think of it as just people who want to steal credit cards and buy shit with it. Money laundering is more akin to, I have a business, it's producing a lot of free cash flow,
sure,
but it's ill-gotten gains. So I need to take that and put it through a legitimate entity so I can put it back into the financial system. This is more just credit card fraud.
Yes.
And at the time, the epicenter of credit card fraud was Ukraine. They were the biggest credit card fraudsters in the world. That's dropped a little with the war. But what I'd say, where I've been surprised, is I would have thought by now that tokenizing real world assets, and NFTs are ideal for that, would have taken off more than it has. And that's been a bit surprising to me. That's still where we think NFTs have the greatest utility. While NFTs helped a lot in getting people to want to collect and want to check out crypto, the downside, if you will, is that people associate NFTs with media files, right? The trading of art. And, that's an application of an NFT, but certainly not what an NFT is. And so educating people, especially entrepreneurs, about what an NFT is and what it's capable of I think it's taken longer than I thought it would.
There's two things that you brought up there, and I want to ask on the first one, which was, what was the solution to fraud that you guys came up with? And then the second is associated with tokenizing real world assets. I'm interested in the actual mechanism that you guys are using for associating those things, because that's like the most difficult component of this. Like, for example, someone can just like stick a QR code, for example, on the back of like a painting and link to the same pointer, essentially. Like, how do you get what is the mechanism is the other question. Two completely unrelated things, but I'm curious about both.
So the the shorter answer on the first question, how did we solve credit card fraud? So we didn't solve the problem. We just made it manageable. And manageable means that the credit card fraud represents less than 1% of the total credit card volume in any given 3-month period. If you do more than that, you lose your payment service provider. They ditch you. And how we did that was basically the core part of 20 years of work with the buying and selling of video game virtual items. It's a staggering amount of pieces that we glued together to do it. So it'd be really hard to, we can't attribute it to one thing. What I will say is, you would think if you had someone's their driver's license, their passport, you know where they live, you know what internet service provider they use, you have their telephone number, you know, their mobile phone number, their Mac ID address. You would think that would be sufficient, and none of those things matter. It just in the end, what we realized was the fraudsters are so sophisticated that simply trying to look at a person and decide, is this a real person, when they submit a credit card, is not going to work. And by the way, you saw this, I think Flow had a lot of problems with this in 2021, where they were like, wow, we're getting all this volume. But what had happened was a ton of fraudsters had decided, wow, Flow will give us credit for these NFTs with stolen credit cards. And so it's a whole workflow process of techniques that we put in place to try to identify bad guys from good guys.
So it sounds like it's like a sequence of filters, basically. You have a whole mechanism of just similar to, there's a lot of fraud detection systems that include machine learning and other things now that try to flag patterns that you see, and it gets smarter over time. So if you see, in the machine is way better at identifying all those different indicators than a human. So there's definitely false positives. Well, obviously false positives, false negatives, but the false positives are way better than false negatives in terms of fraud, because if you're letting people through. But so it sounds like probably you have a pretty robust system now backing the entire payment infrastructure.
Yeah, and everything you said is exactly right. To a point where, I couldn't tell that this transaction is fraudulent, but the system is saying a high probability that it is. And for us, what it came down to was taking a step back and asking ourselves, what are the behaviors of bad guys? And it was when we took that angle that we really started to solve or reduce the fraud problem a lot. And as I said, it's just a layer upon layer of techniques that we employ. So it is possible. If you had asked me 10 years ago, can you take credit cards for virtual items? I would have said it's very iffy, and everyone has to be thoroughly vetted. But now I would say you can.
Is that intellectual property that exists core, like Wax has actually built that payment fraud system, basically, and you guys own that right now? I mean, just on that front, that seems like a licensable asset or property, regardless of the outcome of NFTs. So that's a really fascinating thing. But I want to think about the other side of things, which you were mentioning, which is, or that I asked about, which is the mechanism for those that understand. And I think that mechanism also ties to adoption. I would assume the easier that you make these, the mechanism of the tying of physical real world assets to the digital counterpart, and you make that as accessible as possible to the consumer, so there's minimal friction involved, then you're going to see suddenly the unlock of the ability of consumers to actually use the product, because they don't want to think about it. So what is the mechanism that Wax has right now?
Well, I'm going to, I don't know if make you feel good or bad by my response. It turns out that was an area that I had a suspicion about. And my suspicion was probably contrary to what you're thinking. You're thinking about this quite straightforward logically that, well, if there's an off-chain element to this thing, how does the consumer get comfortable that that thing exists? And that really just comes down to brand. The same reason you feel comfortable when you buy something on Amazon that they're not going to steal your credit card and never ship you something. You don't even think about it. Most of us don't really think about this for most of the brands we buy from. And the same exists in the crypto space. You know, you have to have those physical goods somewhere, right? They have to exist somewhere. But what happens if somewhere they exist, there's a fire and all the stuff in that distribution center burns down? But if you think about it, that very same risk exists today when you buy something on Amazon. And what they do is they just refund you your payment and say, sorry, it got lost in the mail or it burned. So that part of it is quite simple because the system already exists for people to redeem merchandise, right? Ship it, redeem it. Very early, I want to say like 2018, we put into the Wax wallet, you know, the ability to input your delivery address. And then as you were playing around with these NFTs, if you wanted to redeem the physical good associated with that item, you would just go in there and, you know, type in the address that you wanted to get the receipt. You would redeem the NFT. It's now a new NFT. It's a redeemed NFT. The old NFT, I think it depends. Sometimes you can still keep it, but it's just redeemed, or sometimes that would go away and you would just have the redeemed NFT and you would get the physical good. So it's, you know, the e-commerce technology and all the processes built from mid-90s up until now really paved the way to make that part of it easy.
We actually built something similar in terms of a redemption process. We have redeemable NFTs on our system where as soon as the person wants the item that they're getting, it essentially gets burned. Is our approach currently. I like that. Like we've thought about having a coupon certificate, whatever it is. Mm-hmm. The thought that I was having when you first brought that up was essentially the same way as having the verified thing. Like I bought one of those Damien Hirst NFTs, for example. And so I burned one to get the actual physical, but to verify that thing is real right now is just based on some squiggly signature on the back of it. It's not tied to any sort of certificate of authenticity. Although, I mean, some professional art, you know, authenticator could probably like use a magnifying glass and say, this is the real thing. But I guess I was wondering about that side. Is authentication even something you guys are concerned about or no?
Yes. I mean, when you get into collectibles, physical collectibles, of course, that's a huge area, but it's not specifically germane to, you know, the virals that we have. It's that problem exists anytime you buy an item that is you know, reported to be an authentic thing. So, you know, if you look at the sneaker business, guys like StockX, Stadium Goods, those GOAT, all of those marketplaces, they get in a sneaker and then they go through a process to authenticate it, and they're right generally. It's kind of funny that we're not talking like 99.9% right. I think it's like 90+% right. And if you've ever bought a sneaker from one of those guys and it's fake, it's kind of funny. They're like, okay, here's a 10% discount or something. So the market, the consumer market doesn't seem to really be that concerned about this. And maybe with sneakers, you know, the price point's low enough, it's not a big enough problem. But it has always been an issue with in the collectibles industry. Am I getting an authentic thing? The NFTs don't solve that problem. You know, there's ways to solve it. We've come up with some good ideas, not to solve, but to reduce the possibility that you're getting something fraudulent. There are ways to do that, but there's also a cost associated with it, right? The more time and energy you put into authenticating whether an item is real, the higher the price point it needs to be in order to justify selling it. And, you know, sports memorabilia is kind of notorious for having a lot of counterfeit stuff. So the way those things are resolved is you have to buy it from a specific group who you hope has been careful. Watches is another one. Wine is another area where there is fraud, but it hasn't ruined the market. It just means that brand becomes much more important in those markets than other ones.
I was going to say, it sounds like those issues have existed for decades, you know, like approaching a century, and that's not necessarily the number one problem that you're trying to solve. You're trying to solve the digitization and NFT problem along with it. Nick, another question?
Yeah, I just said one last one, and then P, if you have a question, all right?
Yeah, I had one or two.
So the last thing on this would be, well, what Pio just said and summarized was what I was going to say. Is it sounds like that's not the core problem you all are going after. On the adoption side, you said you know, you were hoping that that adoption would have gone faster. How are you thinking about it now? Like as you're looking towards the next couple of years, what's the core area that you're most interested in, or is it really just waiting for the market to catch up to the product that you all have built for, or is there some new path forward?
Yeah, I still think that the tokenization of assets is so profoundly valuable, that this is an area where blockchains really shine. Blockchains are terrible at virtually everything, you know, which sometimes comes as a surprise to people who are sort of on the periphery of the industry. Actually, sometimes even people in the industry, they're a little surprised by that, but they're really they demand a lot from us to operate blockchains. But in a select number of areas, blockchains provide a utility that is unmatched by any other technology in existence. And one of those is ensuring that the tokenized thing you're receiving is the genuine article.
Yep.
It does a remarkable job for that. And this is an area where I think we need to educate more people about NFTs, because see, in my mind, an NFT is not a pretty picture or a video clip. An NFT is a virtual computer. That's what it is. And it's this remarkable computer because it's completely digitized, right? And it produces these tokenized offspring. And what an NFT allows you to do is to send something to somebody where that recipient knows instantly, at no cost and virtually no effort, that what they got was genuine, that tokenized item is genuine. That is, in and of itself, that would justify all the market cap of crypto. That alone, in an 80 trillion or so global economy, crypto represents, that's annually, global GDP. You know, crypto as an asset, AUM is under 2 trillion.
Yeah.
I think it's very justified to have that as and if you think about it, this is what makes Tether and another stablecoin so valuable, is that you know when you receive it that tokenized version of a dollar or whatever currency is genuine. And so I think the challenge is that it's a complex thing to understand. And my view, long term, I don't know if that's 10 years or 30 years, but long term, I believe most of the world's consumer products will have a tokenized version. And when you order something, maybe not toothpaste, but if you order a piece of apparel or something like that, you will have the option to just take receipt of the tokenized version and then sort of putting a pause button on the logistics train of the e-commerce cycle and decide when and where you want that thing delivered. Because a lot of products people buy are not intended for the person buying them. They're intended for someone else. And the ability for somebody to sort of have a delay in when they get that item, maybe to swap it out for something they actually want, that's a really nice addition to the e-commerce process.
Yeah.
And I think tokenizing assets allows for that. And generally, when we say tokenization of assets, what we think about is gold and real estate and stocks, and those are nice to tokenize too. But we can tokenize a lot of other things, and the benefits of that will really pay off. But the last piece of friction there is something all of us here know about, which is the unfriendliness of crypto.
Sure.
You know, it's not a UI friendly mechanism. Internet 1.0 had some issues. It solved almost all of them. Crypto is still, it asks a lot of the people who interact with it to know a lot. And there's a lot of negative repercussions if they don't follow procedures correctly. And I think those things have taken longer to solve than I thought they would.
Okay, and that actually leads into my next question. You mentioned that, and we'll be done in a couple of minutes here. These will be a couple of quick hitters, William. So when you talk about blockchain being bad at almost everything, I totally understand. Nick is totally on the same page as you as a developer, and I hear him say things like that all the time. But when you have we have a truly revolutionary technology, judging by your responses, I think you do agree with that. The other thing is that we have this financialization that's attached to it, unlike really anything ever before. I don't know if you could make a kind of direct comparison to anything else before.
Yeah, I don't think so.
And we're going to have the CEO of Helios. I'm not sure if you're familiar with that organization, Helios Labs. His name is Mert. He's really great to listen to on podcasts when he talks about the theory behind a lot of crypto. And he talks about that, whether or not the financialization of technology is going to long-term be proved to be the right approach, so to speak, right? Because of the way people think about crypto. A lot of people just think of it as a gamble. A lot of people think when the price is down, it's bad, and when the price is up is good, even though the technology hasn't really fundamentally changed, or if it has changed, it's changed for the better, right? Because it's just progressing, right?
Yes.
So when the combustion or when cars replaced horse and buggies, or the horse and buggy, right? I have to think that the first 10 years of the car were not that great compared to a 2024 BMW, right? Is that not where we're at with this? And you talked about the internet. You're probably thinking of the internet in the 90s, but if you go back to the technology for computer and internet technology in the 70s and 80s, it took a while for it to really become special and something that's easy to use for everyone. This is a quick question, but is that not where we're at with the kind of crypto technology side of the market?
Yeah, I would say, first, you're absolutely right about internet. I mean, Len Kleinrock, professor at UCLA, sent the first message over the internet in 1966. The Mosaic browser, the first kind of consumer-friendly internet browser, was 1993.
Yeah.
So there were decades of development. But once the consumers became aware of it, it went fast, right? I co-founded something called Idea Lab Capital Partners, which was the first consumer internet venture capital fund. And in the mid 90s, there was nothing, a few thousand websites, and people had no idea really what the internet was. And by the year 2000, 6 years later, there was hundreds of millions of people on it. And it was easier to use. And your point about how the first automobiles versus a horse and buggy had a lot of advantages, partially because the technology was foreign to people. You needed strange fuel sources and whatnot, gas fees in the crypto lingo. I do think all of those are barriers to adoption. NFTs kind of showed us that you could get tens of millions of people to set aside their reservations about how hard stuff is in order to get these highly sought after collections. So certainly the consumer market can go that direction. I think DeFi has the most promise in the near term of getting a lot larger group of people to be excited about crypto because of what smart contracts can do.
Yeah.
It's this instantly changing the way you use an asset.
Yeah.
Something Wall Street is quite envious about because they have a lot of legacy systems. They also have a regulatory structure that was created in a time when the capabilities of tokenization and blockchain didn't exist.
Yeah.
So they can't really now imagine being able to do what we all do very quickly on blockchains, which is why I think the innovation curve in DeFi is so much faster than what you see in the publicly traded markets. And so I'm very optimistic about the capabilities of blockchain eventually getting picked up. But I think there's a lot of, it's almost like two worlds, right? You've got those people who are super interested in the technology and what it can do, and they're more of the minority. And then you have those people who are more interested in speculation. And there's a pretty big gap between those two. And big corporations have been reticent. Part of that is because of the regulatory environment. I mean, so much uncertainty. Even to this day, we're early 2024, the US Congress has not designated which federal agency will have supremacy and jurisdiction over the regulation of crypto. The Treasury Department, who?
They're behind, William. Shocker. But what you're saying is definitely insightful, and also I think it's in line with the financialization component. You talked about how the speculators are almost like a bigger share of the pie, and the other thing is that when you look at that speculator portion of the pie, a significant percentage of them actually don't even believe in the technology. They just believe that there's an opportunity to make some gap of fiat currency between where they bought and where they sold. So, Nick, it looked like you have a question. I have one last question before we let William go.
I was going to say, I just appreciate your practical, lucid take on the blockchain side of things. I tend to agree with a lot of the stuff that you're saying as someone who's developed on some of it. I'm more of a consumer developer, is I guess maybe the way of saying it, where like I view JavaScript developers that is like it's an accessible programming language versus when you're trying to build on things like even literally like Solana. It ain't easy. Like, it's just not straightforward. Even if someone trying to build an app, let alone the developers that are trying to build the blockchain itself, which is a whole other, it feels like when you chat with a lot of them, borderline theoretical scientists.
Like a Bitcoin core developer?
Like, it's
Jesus, yeah.
it's like PhDs. And I'm like, damn, like what's going on in the lab over there?
They're doing some weird stuff, Nick. Last question, William.
But let me comment just a bit on that. I mean, there's one thing a blockchain should do. I think if you just baseline, what is the one thing a blockchain ought to do? It ought to have reliable uptime. It should not crash every 2 weeks, or people shouldn't be surprised. Wow, a month's gone by and hasn't crashed. So blockchains that do that, but that people don't seem to care much about that fact, there's a few of them out there. Really, that's the part that makes me quite curious. Like, what do you guys think the role of these blockchains are supposed to be? Wax has been up for 5 years. It has not been down a week, a day, an hour, a minute. It's never been down. And that should not be that difficult to do. And you bear so much penalty for working in blockchains. You ought to get to the reward, which is these things are super reliable. And that is not the case with some chains. And Bitcoin, I'll just say, because we're all familiar with the term Bitcoin maxis, right? It's such a bizarre thing to me as a guy who's been in technology for like 40 years. The notion that somebody would think there's one technology that is sufficient and useful for all of your problems. You know, it's like a guy who really loves steel, you know, he's a builder and everything has to be steel. And so when, you know, the plane manufacturers come to him, what do you want to do this in? It's got to be steel. It's the best. Not aluminum, nope, got to be steel. Like, why? And especially in technology where there's a limitless number of languages. You know, you go from machine languages all the way up to what we were just talking about, scripting languages. Like, and each of them has a role, you know, and Bitcoin is very useful for a certain thing. And I think what we're seeing right now is a lot of people trying to make Bitcoin into what Ethereum is or what one of these other chains are. And that makes me just scratch my head. You know, you could make an airplane out of tennis balls, but you probably shouldn't, right? Bitcoin should just maintain its stability. It's great and reliable. But putting smart contracts on Bitcoin, for instance, NFTs on Bitcoin, to me, that's silly. And that's mostly just, I think, speculators saying, look what we can do. But it's not designed to really be robust enough for smart contracts.
Well, I definitely agree that Bitcoin maxis are out to lunch, so we're on the same page there. It'll be very interesting to see what, quote, building on Bitcoin, which I think is what you're referring to, plays out. Last question. Look, William, we haven't been in business for as long, or we haven't been crypto entrepreneurs for as long as you. You've been one for at least a decade at this point, right? We've been in business for about 2.25 years at this point. NFTs are at the foundation of our business. When we had Ram Aluwalia of Lumina Research on the show talking about markets, he described NFTs as the first to lose liquidity and the last to gain liquidity in the crypto market, which makes a lot of sense. And you kind of touched on this before when, you know, the bubble bursts, NFTs crash, they're the first one to lose liquidity. How do you operate with that boom and bust that we experience in this industry every 4 years? When things are good, they're great. When things aren't going as well, people act like you're running a lemonade stand or something. I'd love to know how you kind of process that as an entrepreneur.
Sure. This would be another thing we could talk a ton about, but let me just give you from a guy who's been doing this for decades, and I've been a venture capitalist for 30 years. Here is what I can give you as high-level thoughts. The vast majority of the time, you make no money. In technology, there's short periods of time where a ton of value accrues. And then there are dry spells, and it can be bone dry for long periods of time. This is not, you know, an unusual aspect of let's say, crypto or NFTs. This is just the way the financial markets really work. All financial markets, and NFTs are really part of that. As a quick aside, from 1980 to the year 2000, there were like, I don't know, 8,000 days or something, however many that is. The return for the S&P 500 is about 11.8% over that 20-year period, 1980 to 2000. If you took the best performing 30 days out of that 20-year period, the returns go from 11.8% to 4%. If you take the best performing 60 days, the returns drop to about 2.5%. 60 days out of 20 years. 20 years. So now think about crypto. It's very similar. And then what we were doing, my partner and I were doing before this, was we were operating exchanges. My partner invented the concept of buying and selling video game virtual items for fiat, you know, for real world money in the late 90s. And we saw the same thing with video games. There would be this surge of interest in the game, lots of people collecting, and then die off, and then another game, or maybe the old game would get renewed. So it's a cycle. In venture capital, we talk about the IPO window. Every 4 years or so, sometimes it's 5, sometimes it's 3.5, the markets say, you know what, we're feeling risky. Why don't you guys show us what you got in these pre-public companies? And the window, my experience over 30 years is the window lasts between 9 months and max 18 months, maybe 12 to 15 months on average. That's it. And then you go back as a VC to waiting it out. So what I would say is, don't fight that. Understand that that is how these things work, and build your business so that it is resilient, so that there is maybe a baseline of revenue coming in for certain things you do, but the big capturing of amounts of value is going to happen more periodically, and that just has to be part of your plan.
I absolutely love that. I've been discussing that with literally I had dinner with a business or a friend last night who a fellow entrepreneur, and we were just talking about that same thing. There's like he's in the e-commerce space. There's volatility and cycles there just on the consumer. Q4, for example, is when everyone's buying products because of Christmas and the holidays, et cetera. And then he was like, January was awful. But what they also have built is products that deliver stability of cash flow to the business, or offerings, essentially. In this case, it's actually services. I shouldn't have said products, but like you got to get through that first phase of having a product that actually resonates with the market. And then it feels like tack on that stability base layer is something that comes through evolution. A lot of businesses die in the process, I think, of setting up that foundation.
That's right.
And that's just the cycle of life. It feels like for a lot.
Yeah, you know, I'll say I've started so many companies in my career. I've never shed a tear when a business fails. I wish it would work, but these are experiments.
Yeah.
You know, these are tests, and you try it. And, you know, if you went into venture capital thinking that everything you fund is going to go public, you'd be very sad. Like the vast majority of what you do is a loser. That's just the reality. I'm talking early stage VC. If you're late stage, it's different. But when you're funding ideas, very nascent businesses, the majority of them aren't going to work. So you have to kind of like the challenge. Imagine being a pro athlete and saying, I need to win the national championship, you know, every single year.
Right.
You know, you would be depressed. You have to be in it for a different reason. Before we go, I would like to make one comment too, maybe to further incite the Bitcoin maxis. I have said many times that Bitcoin failed as in its intended purpose.
Peer-to-peer electronic cash.
What, boy?
Yes. Right. I mean, that to me is not debatable. As someone who loves Bitcoin, owns Bitcoin, uses Bitcoin, but as a form of payment, and I'm in this space, it's an absurd use case. And if there was no other system around, I'd say, yeah, it works okay. It's super expensive. You can't do small transactions. I didn't look today, but it ranges from $3 to $5, $6 to $10 per transaction. You can't do small transactions. You got to wait 10 minutes. It's very difficult to use. And of course, it's highly volatile. So what is obvious to me is going to be sitting on the shoulders of Bitcoin is stable coins. Stable coins, tokenization, which is what Bitcoin gave us. Tokenizing real world fiat is an outstanding way to conduct payments. And you can structure the blockchains that it's built on to operate a lot faster and a lot cheaper. I mentioned this just because sometimes when I say, you know, Bitcoin failed in its intended purpose as this peer-to-peer payment system, a lot of people think I'm a hater of Bitcoin. I'm not. I just don't think it works for what it was designed for. But as a place to store value, it's volatile, but it can't be seized. Bitcoin has tremendous applications in its own like limited area, and I think will remain the dominant blockchain or the dominant crypto for the foreseeable future.
Well, a very nuanced explanation from the co-founder of a literal top 2 global stablecoin. So, William, thank you so much for joining the show today. This was very, very insightful in many ways. We really appreciate you joining us, and we hope that you'll come on again.
I'd love to. Thanks, you guys.
Absolutely. Have a good rest of your day.
Bye-bye.
Ladies and gentlemen, that's our show. It was brought to you in partnership with EOS Sapiens and their upcoming EOS Sapiens drop that's happening at 12 p.m. Eastern Time. This is a collection of 5,555 generatively crafted NFTs. There's a very, very cool message and backing to the project. So basically, the NFTs represent one ton of CO21 sourced from the Rimba Raya Biodiversity Reserve in Indonesia. So the collection ties real-world assets, RWAs, and NFTs, and allows carbon credits to be traded on the blockchain. In addition to the profile picture the carbon credit comes with, the EOS Sapiens collection is minting today, starting at 12 p.m. Eastern Time. You can sign up for a chance at the allow list via first come, first serve by checking out the pinned tweet that you see on the Twitter Spaces show. Clemente has been showing some of the artwork and showing, kind of the user interface on the web platform on the YouTube show today. Very, very excited to have them as a partner. It's, some of their investors are our investors. So always cool to kind of keep it in the family a little bit, ladies and gentlemen, and really, really cool to have an organization like this kind of in the same network as us. Anyway, that's our show. We'll be back tomorrow, ladies and gentlemen. We do the show Monday through Friday, 9 a.m. Eastern Time each and every week. Available on Apple and Spotify podcasts, wherever you get your podcasts, YouTube, X platform for video, if you'd rather actually watch the stream versus just listening to it. Of course, it's on Twitter Spaces. You know where to find us. Thanks so much for listening.